While the rest of the world is tangled in a messy debate over crypto, Japan is quietly getting ready to flip a switch. For a decade, the country was a crypto graveyard, haunted by the ghost of Mt. Gox and suffocated by some of the world's most punishing taxes. But a massive legal overhaul is about to completely reverse its course. This isn't just a wild prediction, the groundwork is already laid, and the money is already moving. Some of Japan's biggest public companies are using the certainty of this new direction to pour billions into crypto, and Ethereum is at the top of their shopping list. So, what are these changes, and why are they on the verge of unlocking a tsunami of corporate cash that could reshape the entire market? To really get how huge this is, you have to rewind the clock. For years, Japan was hostile territory for crypto. The collapse of the Tokyo based exchange Mt. Gox in 2014 wasn't just a national embarrassment, it kicked off a regulatory ice age. The government, determined to stop another disaster, rolled out a minefield of confusing rules and painful taxes. The biggest wall was the tax code. In Japan, crypto profits were labeled miscellaneous income. For high earning individuals, this meant gains could be taxed at rates up to 55%. This created one of the most punishing tax systems for digital assets in the world. Now, imagine you're the CFO of a major corporation. You want to add a promising asset to the company's treasury, but then you have to tell the board that over half of any profit will be instantly wiped out by taxes. That conversation is a non starter. This created a crypto desert. Innovation fled, investors went offshore, and Japanese companies were effectively blocked from the digital asset revolution happening everywhere else. Holding crypto on a balance sheet was a financial death sentence. It wasn't just unprofitable, it felt irresponsible. The government's message was loud and clear: crypto is dangerous, and we will penalize anyone who touches it. This was the lockdown, a decade of regulatory winter that froze institutional adoption solid. So, what changed? What key is finally unlocking the vault? It's a powerful 1-2 punch of strategic moves that are set to completely redefine crypto in the eyes of the Japanese state. The first and most critical move is a proposed overhaul that will reclassify cryptocurrencies under Japan's Financial Instruments and Exchange Act, or FIEA. This is the big one. This act governs traditional securities like stocks and bonds. By pulling crypto under this same umbrella, the government is sending a crystal clear message. Digital assets are no longer a weird, speculative sideshow. They are legitimate financial products. This reclassification, which is planned for submission to Parliament in 2026, does two crucial things for a corporation. First, it establishes a predictable legal framework. Corporate boardrooms don't run on hype, they run on legal certainty. The FIEA provides exactly that. It introduces rules for everything from disclosures to insider trading, putting crypto on the same level as the stock market. For a CFO, this means they can finally hold Ethereum with the same legal confidence as any other traditional asset. The second part of this unlock is the tax revolution that comes with it. As part of this legal overhaul, Japan's Financial Services Agency is pushing to slash the crippling tax on crypto gains down to a flat 20% capital gains rate. This would align the tax treatment of crypto directly with the tax on stocks. Suddenly, holding Ethereum on the balance sheet shifts from a tax nightmare to a smart financial strategy. The penalty is gone. The door is now wide open. This combination, legal clarity under the FIEA and a fair tax rate, is what makes Japan the safest and most attractive place in the G7 for a corporation to build a digital asset treasury. This isn't just theory. The floodgates are already creaking open. The first major example is a Tokyo-based company called Metaplanet, nicknamed Japan's MicroStrategy. Once a struggling firm, Metaplanet completely changed its corporate strategy to focus on acquiring Bitcoin as its main treasury asset. As of late 2025, the company holds tens of thousands of Bitcoin, cementing its status as a major corporate holder in Asia. Metaplanet proved the model. A Japanese public company could go all in on digital assets and the market would reward them for it. But while Metaplanet focused on Bitcoin, another giant has its eyes set firmly on Ethereum. Enter Quantum Solutions, a publicly traded company on the Tokyo Stock Exchange, supported by a massive $180 million funding round from institutional heavyweights like ARK Invest and Susquehanna. Quantum Solutions has declared its mission to build a colossal Ethereum treasury. Cathie Wood, the CEO of ARK Invest, has publicly praised the company for becoming Japan's first institutional-grade Ethereum treasury firm. Quantum Solutions has been on an aggressive buying spree. In 1 week alone, the company purchased 2,365 ETH. Its holdings have quickly grown, making it the largest public holder of Ethereum in Japan and the 11th largest in the world. The company's CEO has stated that Ethereum is the primary focus of their digital asset strategy and that they will continue to accumulate more. They aren't just holding it, they're building a strategy around it. Their stated goal is to build a treasury of 100,000 ETH. This is the corporate mindset unlocked. While other major economies are tightening rules, Japan is providing a clear, regulated path forward. This regulatory safety is precisely what CFOs and institutional investors need to justify allocating billions from their balance sheets. They aren't just gambling, they're making a strategic allocation to a newly legitimized asset class. And they are doing it with the blessing of one of the world's largest economies. This is a pivotal moment, not just for Japan, but for the entire crypto world. It's a real time case study of what happens when a major government chooses clarity over confusion. If you want to stay ahead of these massive institutional trends and understand where the big money is moving next, make sure you subscribe to the channel. You won't want to miss what's coming. So let's tie this all together. For years, Japan was a crypto wasteland, crippled by the memory of Mt. Gox and a 55% tax rate that scared everyone away. But with a strategic regulatory shift on the horizon, everything is changing. By proposing to reclassify crypto as a financial product and slash taxes to a flat 20%, Japan has done something revolutionary. It has created a safe harbor for institutional capital. We are seeing the results right now. Companies like Metaplanet and Quantum Solutions are no longer exceptions. They are the pioneers of a new wave. With backing from global investment giants like ARK Invest, Japanese corporations are aggressively adding Bitcoin and Ethereum to their treasuries. They are signaling a fundamental belief in their long-term value, not just as assets, but as foundational technology. What Japan has built is a blueprint. It's a repeatable model for how other G7 nations can move past regulatory chaos and unlock trillions of dollars in corporate capital. Hardly anyone is talking about this, but the financial tectonic plates are shifting beneath our feet. Japan isn't just pumping crypto, it's building the legal rails for the next era of mass adoption. The question is no longer if corporations will adopt Ethereum, but how quickly they will follow Japan's lead. What do you think? Is Japan's model the future for institutional crypto? Let me know in the comments below.